What you're telling me is that music is about to stop, and we're going to be left holding the biggest bag of odorous excrement ever assembled in the history of capitalism. 1974, 1987, 92, 97, 2000, and whatever we want to call this. It's all just the same thing over and over. We can't help ourselves.
I say when we sell. Hey, I say when we sell.
Washington is quietly counting its Bitcoin, and when the White House finally publishes that number, estimated to be about 200,000 Bitcoin, it could be one of the biggest catalysts of the year. That is what Alex Thorn, head of firm-wide research at Galaxy Digital, said on this episode of The Last Trade. Really a sign that there is far more juice and catalysts left in this cycle. We've heard a lot of bullish things in 2025, but many haven't materialized yet, and so that's exactly what we discussed. Ultimately, though, none of this matters if you cannot secure your Bitcoin for the years to come, which is exactly why OnRamp exists. It's why I work here, and I use OnRamp for my family's Bitcoin nest egg. OnRamp was built to help people like you secure their Bitcoin with confidence and achieve peace of mind with multi-institution custody. Baked-in inheritance and insurance from Lloyd's of London at no extra cost. Whether you're safeguarding family wealth, a corporate treasury, or client assets, head to onrampbitcoin.com, book a consultation, or you can get started in 10 minutes. Now, I hope you enjoyed the episode.
All right, we're recording. We're back. It's The Last Trade. And we're back. I'll say we're back because of our loyal audience. Because people decided to show up last week. I did not get fired. Alex, we can tell you later in the episode, but Michael has been threatening to fire me for several weeks at this point. And because of our loyal audience, The Last Trade, not only did I not get fired this week, but we were also able to bring on Alex Thorn, who is the director of firm-wide research at Galaxy Digital. Alex, thank you for joining us. How you doing?
Yeah, hey guys, great to be here. First-time caller, long-time listener.
Love it.
Actually,
director of research and memes, by the way.
I do have some memes. I spend that is research. Okay, my memes have a research quality to them.
Absolutely. And funny enough, you were on the podcast one time before, and it was actually when the ETFs were approved and launched. January 10th, the price of Bitcoin was $46,000. We've come a long way.
More than a year ago.
Yeah, we've come a long way. We're looking at 103 today, so we are going to pull up the price just very quickly because I have a question that's been top of mind. Is the top in? Did we already see the top this cycle? Did we double peak at 110K, Alex? What do you think, man? Am I too bearish right now?
Yeah, I don't think so. I don't think we have topped. That's a blanket statement. Look, there are fears of a double top pattern, right? Everybody saw that in 21, and then you're looking at it here, and you only got to what, like 112 the other day or 2 weeks ago. Wanted to see that go to like 120. Like, I think to feel like it definitely wasn't a double top, but the thing is like there haven't been that many catalysts actually have happened. There's plenty of good stories, right? People in the government saying nice things about Bitcoin and stuff. Most of it hasn't even happened. Retail's not really here. Like I don't see a lot of reason for Bitcoin to go down, and I see plenty of reasons for it to go up. But I also see plenty of reasons in the near term. I mean, I'm basically sort of targeting mid-July to maybe sort of restart this when the presidential working group delivers its report to the White House, and then maybe there's a catalyst there. But you're in sleepy early summer here, and I think now you're sort of just trading on macro headlines for the near term. But I don't see I don't see a reason for a big drop in the near term. It's widely owned. To be clear, like whales have been selling. Like the corn that's being sold is being sold by like people that bought in like the 15K and lower range, an enormous amount, right? So apparently they all made money and they're not hodling anymore. Not all of them, obviously, but like you've had an enormous amount of selling and we're still over 100K. Like it seems, I don't know where else like more corn to be sold is going to come from, you know? So like I feel pretty sturdy here.
Yeah, it would be a very interesting top if retail never showed up, because I think anecdotally you see retail hasn't come in. It'd be kind of maybe bullish for them so they don't get rugged by whatever is going to happen, because there's going to be no shortage of mousetraps when this thing really takes off, that they just got to bypass a whole bull market. But that's never happened in Bitcoin's history, that retail hasn't come in droves and then also probably gotten rugged along the way. Oh,
Well,
here it
maybe
is. Here's the
yeah.
timeline.
Well, maybe we pull up some of the exceptional research that Alex has been doing. We have a great meme that he shared yesterday on Twitter or X. Maybe retail is here, but they're buying Bitcoin Treasury companies.
Yeah,
Alex, could you walk us through this meme here? What's going on in this?
Yeah. So basically, I'm just sort of cataloging some of the eras, the metas, the big narrative metas since 2017. I've been working on Bitcoin and crypto full time since 2017, like first at Fidelity, now at Galaxy. And this is just what we came up with remembering sitting around. And obviously ICOs, that's easy to remember and was a huge deal. It created tons of new altcoins. It separated people from their Bitcoin. Many of them failed. Some of them are still around, like Cardano was a 2017 ICO, right? Tezos, they exist. Not all of them literally were frauds. Some of them might just be, crappy networks that did actually launch. But it was the fraud and scam from that then led to, which I don't even have on here, the the later meta of VC coins, right? Of doing these private token deals through VCs and then releasing them through secondary sales rather than primary sales to the retail. Then I don't know, 2018 was a bit tough to come up with one, but we do recall BitMEX trading on leverage, and BitMEX was like the first time that everybody was doing that. And then 2019 also a bit of a lull. I remember being at the Bitcoin conference in June 2019 with Bitcoin, after the depths of this post 2017 bear, it was rallying from like 8 to 13K, and we're like, oh, are we back? And then it failed to consummate, and later we all learned that it was a giant Ponzi scheme in China called Plus Token that you had to buy into with Bitcoin. That was probably the reason for that rally. DeFi Summer, the food Yam Finance, Sushi Swap, like Algo Stables, big in 2020 when everyone was locked at home. And then remember Elon in January, they said Tesla was buying Bitcoin for their balance sheet. It was super bullish. Then later he said, wait a sec, I didn't realize that Bitcoin uses electricity. I'm rugging. And then Bitcoin, and then that was also right around when China supposedly yet again banned mining. And so we dropped from 60s to 25 in the spring of 2021. And then obviously Dogecoin hit 69 cents with Elon on SNL and blah, blah, blah. And then, 22 is when all the yield stuff came to a head, right, with all the lenders going bankrupt. I should probably have in 22 also the GBTC discount was a big part of that year. And then 23, Bitcoin opens the year at 16.5. Great to buy there. By March, on the collapse of SVB, it runs all the way to like 26, 27. So it was the bank failures. Then it was BlackRock in June announced that they were doing a Bitcoin ETF, and then Grayscale won the U.S. District Court of D.C., the U.S. appeals ruling at the appeals court in D.C. in August of 23 that ultimately paved the way for the ETFs, which launched in 24. Basically, the story of last year was like ETFs and meme coins, and then later Trump embracing Bitcoin. I think that's pretty much the whole narrative of last year. You had that barbell market where it was like the lowest quality, low cap penny stock cryptos, meme coins were rallying and pushing Solana up with them, and Bitcoin, and everything else in the middle like sat it out. ETH had a terrible year last year, while Bitcoin, doubled practically, or did double ultimately. And then I'm saying, like, I think the meta right now is Bitcoin Treasury companies. We're tracking like 35 of them. It is getting blown out. There's now, we saw there's a Chinese limousine company that's going to start an XRP strategy. So it's starting to go down the shitcoin waterfall a bit, but that's a huge part of this story, right? You've got Cantor, SoftBank, Tether. You've got obviously MicroStrategy. You've got now Bitcoin Magazine, right? You've got BTC Inc. with Nakamoto. You've got ones that are geographic based in Hong Kong and China and Japan and South America, right? Like there's a whole range of ways to do it now. And you've got like 20 to 35 of them at least. And that seems like a huge part of the story this year.
It was an excellent montage to run through. It had eerily resemblance of TFTC back in the day that I think Marty owes everyone a montage through Bitcoin or crypto's history. I think actually there's a lot of alpha if we ever clip this up and share it, because most people coming into these markets have no idea of half of those narratives, let alone all of them. And ultimately, I think the meta to the meta is that there's always a contraption to take people's Bitcoin. And some people maybe make a little bit more Bitcoin, but a lot of people in the past 10 years have ended up with less Bitcoin. So TBD on where this all goes for everyone.
Yeah, and like when I made that meme, like I'm not explicitly, I hadn't intended it to be all of those were bad things. Like I was just trying to recall like what the big story was of the year. It turns out though that like pretty much outside of owning Bitcoin, like most of the other things that have happened in crypto just haven't panned out, right? So I feel bad because I'm not actually saying that Saylor with his laser galaxy brain is equivalent to like food-based finance. I'm not saying that. Just saying like that's the current story. But it turns out a lot of the current stories end up, being short-lived. Well, we've gone through a lot of them. It's an epic saga of crypto. It's been continues to be an epic saga. I don't know how we keep coming up with these new things.
I, for one, am excited about K-Wave Media, which is the prominent K-pop group that is planning to raise $500 million for a Bitcoin treasury strategy.
It's a music-based Bitcoin product. Who knew?
Yeah, I'm curious, like, to your point, Alex, it's not inherently a bad thing that these Bitcoin treasury companies exist, and we'll still see how it pans out in terms of Bitcoin obviously plays a massive role in corporate adoption from just a vanilla, like, let's accumulate some Bitcoin on the balance sheet, preserve our company's cash for the long term, etc. And then there's, of course, these other companies that are using capital markets, equity, debt, etc., to accumulate as much Bitcoin as possible. And to your point, I mean, there are companies out there that are viable and have a strategy, but then there's also just going to be a lot of excess that we're just starting to see in this cycle pan out. I'm curious from your point of view, as you've done research at Galaxy in the space here, just like how do you think about assessing the Bitcoin treasury landscape? I mean, what are you excited about, if anything, in that part of the space?
Well, one thing I am definitely excited about is the rising prominence of talented Bitcoin evangelists, and there are many now. And these companies, if nothing else, give them a strong platform, right, to explain and promote Bitcoin in equity markets, and that's a positive. Look, I'm an operating company maximalist. I believe in owning equities that are companies that build stuff. I don't need to get a tiny little, bips on my MNAV at a Bitcoin treasury company. I'm not interested in that really personally. I simply don't care. Let me put it that way. I've basically no opinion. I'm fine with it. I think the big question that people have is, do these end up like looking like a closed-end fund, and what happens if they end up trading at a discount to their Bitcoin holdings? And I think David Bailey's been very straightforward and transparent about this. He says they will sell Bitcoin and use the proceeds to buy their stock back, right? Which is, by the way, that's what they should do, right? GBDC couldn't buy their own stock because they weren't public. Like there was no way for them to close the gap. And because you couldn't redeem, there was no way for anyone else to close the gap. Now, you can't redeem here in a Bitcoin treasury strategy, but the issuer themselves can close the gap. So the fear is that if they end up having to sell some Bitcoin, if it's a lot of Bitcoin, then that can create a vicious cycle in the market, not just in spot Bitcoin prices, but also with the other Bitcoin treasury companies. But there's not that much. There isn't a lot of debt. Like it's not really that big of an issue. It's just that like people should know that most likely if their stock prices trade below the value of their Bitcoin, a prudent executive would sell Bitcoin and use it to buy their stock back. So then and you really just don't want to see that, particularly from somebody like Michael Saylor. Like imagine if Michael Saylor has to sell Bitcoin, right? And that's why he doesn't say this. But I'm quite confident that he might do it if he had to, right? And so it's just a bad narrative if someone like, if any of these people who are hyper bullish Bitcoin end up having to sell Bitcoin. To me, it's more about the signal that would send to the market that like, well, I thought these were the most diamond-handed people in the world, right? It's just a strange vehicle, and in general, like I feel comfy in spot,
Yeah, it's strange, and it's also not like it's not long-standing in the sense that if you really extrapolate into the future, let's say these all went up into the right, well, ultimately, everyone's journey maps pretty similarly. Once you find out about Bitcoin, you naturally end up in wanting spot. You learn about counterparty risk. So you have to assume that all these never lose any asset, never get too far on the risk curve and blow themselves up, which I think we all agree is not going to happen. And then once that happens to the first one, everyone starts to wonder, well, like, what am I actually holding? And it's the logical progression from the micro individual to the pension. That's the most sophisticated. Wait, why don't I just hold the underlying? And so it's just like it's a trade. And anchoring back to the montage that you shared, like the plus token stands out because I remember specifically in 19 when the price went from like the bottom, it was like that, it like bottomed in like March or April and then went up until like that November up to 12, 13. And everyone was super long, thought we were going into a market. And then literally it all fell apart and everyone lost a shit ton of Bitcoin because they were either levered up, that was like a holder, or just part of the deal. And so that montage, I think, is just like the first innings in what we're going to see in the next decade, because everything we're seeing, like it's been done in the like off-channel, non-TradFi way. We're just going to see that like fuckery basically in the new world, and people aren't prepared for that, and they're just going to get wiped out. That's at least, it's partially why this business was started, because what happened in 2022 was like, oh my God, the same thing is just going to happen again with the lack of transparency and counterparty risk that existed in 22.
Yeah, I mean, it is a new class of counterparties that have emerged, right? And it's not just in Bitcoin or crypto, but in all of finance, humans make the same mistakes over and over again, right? Like we've seen this story before. When you mix leverage with volatility, like it's highly risky, right? Like so, and that's what this is. That's expressly what it is. Like these companies are harvesting the volatility in their own stock, like, and it's quite clever. Like you have to admire the financial engineering that someone like Michael Saylor is doing. It's truly historic in some ways. I mean, when his company, when his stock was running in the fall, like this MSTR was the talk of all of Wall Street. Like everybody was standing in awe of what he pulled off, like in this crazy thing, right? He announced in summer 2020 that he was buying Bitcoin for his long running, mostly obscure and probably failing software company. And 4 years later, it was worth $80 billion. Like, he was right again and again and again. Like it was epic, right? But not everyone is as smart as Michael Saylor. Not everyone's as good at financial engineering, and this hasn't existed before. So we don't know exactly how, when, or why it could blow up. But everything can blow up, right? The only certainty in life is, death and 10-minute blocks, basically. When you start putting stuff into weird financial structures, you just don't know. I mean, it's the thing. We put out a report on crypto lending, and we're showing how we got a bunch of the centralized lenders that are alive, like Galaxy, to give us their data. And we were showing the aggregate loan and the aggregate like loan book, outstanding loan book size of the centralized lending markets. Plenty of other stuff in that report too, including a bunch about this leverage in the Bitcoin Treasury companies. But so this chart though, so it's last quarter, Q1 was the largest since the top, since Q1 22, right? But the thing is like, the companies that are doing it now or that made it through, like they learned a lot of those lessons. Like it's a significantly more mature lending market than what was happening in 21 and 2. So, and one of the criticisms and constructive feedback I got about this report was somebody saying, Alex, like you're looking back at the way it blew up last time. You need to be looking for the way it's going to blow up this time. And a lot of people are worried that it's these treasury companies that are the new X factor, that if there is a liquidation cascade blow up, that it could come from them. I think that's intuitively right to worry about. But like, again, we also pulled the data, like there's not a lot of debt. Like it's not really it's not nearly as big as people think. And honestly, it's mostly just MicroStrategy. Most of these other ones are just super small. Like even if the K-pop one does 500 million, that's nothing. Like that's not remotely big enough to like cause a huge problem. But yes, if if the K-pop company isn't good enough at managing it, and they have to puke their Bitcoin, and then that causes another slightly small one to also have to puke their Bitcoin, and then that's the fear, the positive feedback loop. But we're not there yet. But I think this is like still the top story of the year, and like I said, it's not just Bitcoin anymore. There's several Sol ones. Joe Lubin is launching an ETH one. I said there's a Chinese limousine company launching an XRP one. Like I don't know how far this goes.
It's actually a good question, because something Brian and I have been, battling for the past few months is about Bitcoin dominance, and he kind of sees it going up and to the right, and I feel like it's the opposite. Obviously, over a long enough time horizon, I think up and to the right, but because of this, there's an unforeseen bid for altcoins, and I think this is the play: is you're going to wrap securities around other assets, and the market doesn't really recognize it. Do you have a stance on either way?
I mean,
on Bitcoin dominance.
Yeah, I would say in a long enough time frame, it should go down, and not even because Bitcoin's importance doesn't go down, but you can launch unlimited altcoins, right? So like eventually, like even if it's orders of magnitude bigger than the others, there's still unlimited numbers of those that can emerge. You only need, 5,000 like $10 million ones to challenge dominance, right? And that's like, to me, that it actually should go lower over time, just naturally, even if it's absolutely dominating. In fact, I think looking at that chart, like I think it's pretty remarkable given like that. I mean, you really did have a Bitcoin native and Bitcoin only renaissance over the last 18 months. Like even with the ETH ETFs, if you look, I mean, it's paltry compared to the Bitcoin ETFs. I think it's like, a couple $100 million in net flows. I think they're actually, ETH ETFs are minus $1 billion net because of what do you call it? What was the GBC one called? I forget. Whatever the grayscale one is. Whereas the Bitcoin net flows in the US ETPs are 60 billion, right? So it's just not even close. And I just, having been in this market a long time, like usually the historical thing has been Bitcoin runs, the altcoin runs, then you have a giant outside the risk curve, all of the shittiest altcoin runs, and then the whole thing collapses, and then you get a bear market. Like that's how it went in 17. It's basically how it went in 21, and just hasn't played out like that at all. You don't have a parabolic move. You have a pretty nice, slow and steady rise, basically. I mean, if you watch every day like we do, sure, it's felt volatile at some points, but Bitcoin crashes to 103, which is the price that it was like 3 months ago. It's 5 months ago. I mean, basically, Bitcoin is the same price it was in mid-December, right? It's almost like nothing happened at all in 6 months, right? So it's like we're just sort of grinding, and I think there's a lot of positives for Bitcoin in particular that are still playing out, right? So it's like, I don't know if maybe the stablecoin legislation will be buoyant for like ETH and Sol, because the stables probably move on ETH and Sol, and if you get like some giant like explosion of these stable coins, maybe that's a catalyst. But sort of like the other metas in altcoin land, the metaverse, gaming, like NFTs, etc., DeFi, like they're just not resulting in coins going up, not mostly, right? And so, but while Bitcoin grinds higher, so that dominance chart has just been grinding. But even like ETH BTC is like, I'm a long time ETH BTC watcher, and I think we bottomed recently in like the 0.018 range, which is super low, to be clear, like historically low, almost basically at the historic lows for that chart. And it's rebounded a little bit here. It's like 0.024 or something like that, 0.023. That's still super low. Like that's still super low. It's reasonable, I think, just from a pure market standpoint, to say like, well, it probably will rebound, probably, but it hasn't, and it's part of this Bitcoin. I still think it could go lower. I mean, it's like you look at the ETFs, and it's just orders of magnitude. I mean, the Bitcoin ETF flows are more than 60 times more than the ETH ones. Bitcoin is a lot bigger than ETH, but it's not 60 times bigger. Like the ETFs are skewed heavily, way above the market share of the two assets in favor of Bitcoin.
Yeah.
I think that tells you something about the demand for Bitcoin as an institutional asset versus these other cryptos.
Yeah, absolutely. That's sort of been a key point of my thinking around dominance in general, is looking at those ETF flows and just assessing the appetite from larger pools of capital for all of these other assets ex Bitcoin. And I think, part of what we're also saying is like, well, the question is that moving out the risk curve is that now just Bitcoin Treasury companies? Like, does that sort of replace that demand for some form of leverage or more risk effectively? And I want to go back just briefly to the point around like the actual indebtedness of these companies. And I think, Saylor's been very intelligent. Like, intelligent leverage is sort of a phrase coined from this. But like, I think that right now, you're totally right. Like, it is muted, but where my concern or question comes in is like, okay, so for all of these other imitators and latecomers, yeah, it's not like excessive right now, but ultimately, how do they compete? How do they try to catch up? In my mind, like, it probably involves taking on more leverage, because I think there's, in your mind, is there a point of saturation where like, do you need 12 dozen tickers of proxy Bitcoin exposure, or like, because otherwise, like, how do they differentiate? Like, obviously there's jurisdictional differences. Like Metaplanet has its niche, and I think that'll sort of replicate across other jurisdictions as well. But like, how do you think about that point of saturation? We're clearly not there yet, and like, if I'm being honest about it, it probably could persist longer than I anticipate. But is there a point of saturation where, like, in order to differentiate, they will take on more leverage?
Yeah, that's a great question. I don't know the answer. I think you're right about the differentiation problem. If we think of it as a problem, why do you need all these? And I don't know. You start to, I mean, part of what the suggestion is that you pay the premium on Bitcoin because you get the intelligent leverage, the management there, in particularly in Strategy's case, like 25-year-old stock, like deep and liquid options market, right? I mean, sometimes it's been like the highest traded equity in the entire U.S. stock market, and you get the intelligence of the team there, right? Michael Saylor, Sharice Jajodia, like Ed, and like, right, they are talented financial engineering, talented. Like, these are truly epic types of new securities that they're creating, like, that just they're super interesting if you're a nerd for financial engineering, right? Is everyone as good at that? I don't know. So maybe that's one way that they differentiate. But again, is the average person that buys these capable of evaluating the financial engineering talent of the man? No, probably not. So then you're talking about, like, oh, is it the spokesperson, right? Like, you've got like a Jack Mallers, for example, or David Bailey, right? They're both talented marketers, right? And let alone Michael Saylor, who's probably the most famous person in the world that likes Bitcoin over the last like 3 years at this point. Like, he's sort of that's what I loved about the fact that Trace Mayer is back on the scene a bit, because I was like, dude, Trace was pretty much the most famous Bitcoiner in a prior era, and he kind of left the public sphere right after Michael Saylor came on. So it's like, you've never really had the monetary philosopher balance to the Michael Saylor, like, hardest asset in the human history balance. I think there has to be a point of saturation, even if you just look at like convertible debt markets. Like, there's a lot of money there, but like, I mean, how much, right? Like, at some point it's like, do I buy MSTR debt or do I buy this other one's debt? Like presumably there's not an unlimited source of buying there, right? So yeah,
Trace
I don't
ticker.
know. Yeah, I mean,
we need a trace ticker now. Like, maybe it's too much coincidence.
I think if you had, like, I think the jurisdictional one is interesting. It's very similar to, like, in 14, 15, 16, 17, doing venture investment in crypto exchanges. Like, there were whole firms that did very clear strategies, like invest in the next Coinbase in this jurisdiction, in that jurisdiction, in that jurisdiction, over and over again. Like, tons of them, like a Filipino exchange, a Indian exchange, a South American exchange. Like, that was done excessively, and eventually many of them, like, failed as companies because, like, there's only so much trading, right? Like, at some point you just go to the one that has the most volume, and then you're done. Like, and you could see something similar happen here, but I still, again, like, there are plenty of capital markets that are big enough, I think, to support one of these companies, and people are doing that. They're going around to every jurisdiction to launch them. But beyond that, like, I don't know how many. There is a point. And I think you're right, Brian, to worry about the fear that when that point is hit, if you're facing like death or something, what is that something that you end up doing?
Yeah. And Jackson, I'm sure you probably want to move on so we can transition. But one final thought on all this stuff is, like, it's all very nuanced, because on one hand, like, I think it's entirely rational for basically every business on earth to want to store some of their value in Bitcoin, use it as a reserve asset. And I think that's the trajectory we're on, is every company realizing that over time. The core distinction, though, is that doesn't make every company that decides to do that a wise investment for the individual. And I think that's what's being lost in this broader discussion, is like people just chasing these returns and not necessarily recognizing that these are trades versus owning spot Bitcoin is savings technology. And those are two just very different things.
Yeah, I agree with that. I think, look, the empirical data is quite clear, like, that owning some Bitcoin in a portfolio, basically almost no matter how you construct it, and we've done research on this, and basically the single best benefit to the Sharpe and Sortino ratios of a portfolio with Bitcoin goes from just adding from 0 to 1, basically, right? There have been times when the optimal amount was to have 100, but, like, from a pure mathematical standpoint. But that's true the benefits that Bitcoin can bring to a portfolio or has brought historically is true for individual portfolios. It's true for institutional investors. It's true for endowments and pensions. It's true for why it could be true for a company. That's fine. Owning Bitcoin has been a smart move. It has been a smart move, right? I continue to believe it will continue to be a smart move. That doesn't mean you have to run a company that is 100% capitalized with Bitcoin and whose only job is to issue new shares or debt for the purpose of buying Bitcoin. That is a different thing than just, using Bitcoin for its saving technology. And the other thing I would say too about the saving technology, and it kind of plays into not just the treasury companies, but game stocks, meme coin, GameStop style meme stocks, meme coins, sports gambling. Like, there is a malaise among the global youth about the state of the economy, a fear that their life won't be as good as their parents' was, that their prospects for making it in the world are dim and diminishing further, right? That they'll never be able to buy a house, that decades of corruption and wealth inequality and an economy that is not designed for young people has created this global fear and deep-seated malaise that has led to the rise of much more speculative fiat activities. And in that spot, a lot of people, particularly young people, would rather gamble than learn about the savings technology that is Bitcoin. And that's sad.
Yeah. I mean, that's fundamentally why I keep and won't stop about the whole treasury stuff, is because it effectively plays on the naivete of the traditional 60-40, and most people don't know where to put Bitcoin in. So at best, they're looking at 1% to 2%. So that's where the treasury, the publicos come in. And then on the other side, because we hear this all the time, people feel like 100K Bitcoin, they missed it. And so now you're looking to make that back up. And that's where the speculation comes in a 10 to 100 bagger. And that's where it ends up being kind of like a pervasive setup for people.
Yeah, everybody wants. I mean, look, you've been rewarded for buying stocks basically every single day since 2008, right? Like it's been up and to the right. Retail is conditioned to buy the dip, and it's worked in stocks, right? It's also worked in Bitcoin, and so there is this idea that you need fast gains, and I think the reality is, and I think we all know as Bitcoin believers in Bitcoin, that like. Look, I believe life is about working hard and saving and growing your money and working, right? And I think people are jaded because a lot of the employment opportunities in this world aren't paying enough. They're not. You're declining in real terms, right? Like the that's what I mean about the economy not working. So they have to they feel they have to look for these fast gains and easy money, and it's it's a symptom of the way the economy, the boomers, man, they really screwed this thing up. They did. They screwed up the economy, and we're all paying the price.
Well, now they're aping into MSTR, so like somebody's going to have to pay somewhere.
Well, they should also buy some Bitcoin.
That's what, yeah.
Yeah, we were chatting last week about the housing market in the U.S., and I saw something. You can just pull it up quickly, but then I want to get, Alex, your thoughts on some other things. But the concentration of wealth, I think, is probably obvious to all five of us on the call, and maybe a lot of our listeners, but this chart really puts it into perspective. I mean, this is about 3 decades, and the amount of wealth that's been concentrated in the hands of people who are over the age of 70 has moved from about 19% to about 31%. And so, to your point, Alex, I mean, it's really hard to get ahead. Like we were joking on the last podcast, my wife and I went to a few open houses and just getting crazy outbid by boomers with unlimited fiat money. But
just
anyways,
houses basically, right?
Exactly. Yeah. No utility, just store of value homes. But point being is, yeah, if your wages increase by like 2 or 3% per year, money's debased 8% or so per year past couple of decades, it's pretty bleak for people generally my age. And so it's not surprising to see just, whether it was the DeFi summer of 2020 or now it's just speculating on the next Bitcoin treasury company, people just kind of are grasping at straws, trying to find something that maybe they can get ahead with and not really recognizing that Bitcoin is something that you can get ahead with, but you just need to think maybe a decade or two out.
Yeah, I agree. I mean, this is a devastating chart. That is a devastating chart. And, I don't know how this gets fixed truly in the long run. I mean, I guess maybe if young people can harness Bitcoin or be the leaders in the AI boom. Like maybe you need like an industrial revolution, basically, of some type, I think, to really reverse this. Otherwise, the status quo is always standing in opposition to revolution. That is why it's called the status quo, and that's why it's called a revolution, right? So like the powers that be always want you to believe that nothing can change, that everything's in its right place, that it's all been thought of already. And I think every generation has to try to rethink it and come up with a way to change the world. And we're still, I mean, I'm looking on the other side of the screen here, watching the Senate, waiting for the stablecoin vote to happen at some point. It's not going to happen today, probably, but. And like, dude, I mean, it's like Jackson, pull up the chart of the average age of a member of Congress. I mean, it's the same chart. That's the same chart. It's just up and to the right, like, right? So I don't know. Something's got to give.
Hope you're enjoying the episode. If you could do me a favor and leave a like, a comment, or subscribe, that would really help me out. You heard at the start of the episode, Michael is going to fire me if we do not get more likes, more comments, more subscribes on the podcast. So please do me a favor. If you like the episode, if you're excited and looking forward to tuning in to these episodes each week, it really would mean a lot. It doesn't take much of your time or effort. Leave a comment, throw a like. It goes a long way. Now, I hope you enjoyed the rest of the episode. Thank you.
That's a good segue to just talking about what's going on in the United States from a policy perspective, institutional appetite. I did see that chart. I tweeted about it earlier this week, or quote tweeted and shared it on LinkedIn, but fascinating chart you put together, Alex, on the success, or appetite rather, of particularly Bitcoin ETFs in the United States versus the rest of the world. And I would love to get your thoughts on what is driving that. There's obviously been a remarkable shift in the Trump administration and how they're far more favorable than any other cabinet, White House administration that came before. And then there's, of course, to your point, there is legislation on the horizon that I think will allow for just institutional allocators to come in more confidently, know the rules of the road as it relates to this asset class. But I mean, this is insane, right? Like 60 billion inflows in about 18 months in the US, and then about 2 billion of outflows in the rest of the world. Why is the divergence so massive?
Yeah, well, and I should say, I said that ETH was net outflow, but actually I was thinking of this rest of world number. I think ETH is like plus 900 million versus the 60 billion of Bitcoin. But yeah, at the nation's level, I mean, look, on the one hand, you have, I think a huge part of this story about U.S. versus the rest of the world is just our capital markets are so much bigger and deeper and better. So you can invest in the U.S. stock market from abroad. Like, that's totally possible. So like, why would you own like the Swiss one when you could buy like FBTC or BTCO or IBIT or whatever in the U.S., right? So I think there's a flight from some of the existing vehicles that had existed, publicly tradable vehicles, in Switzerland, in France, and Germany, and in Australia, right? Like, you'd rather just, again, it's the same story. Liquidity begets liquidity. You'd rather be in the U.S. version once they launched. I do also think, though, if we go back and look, there wasn't 60 billion in those foreign vehicles. So like, this is net new demand coming to Bitcoin vehicles in general, and crypto. I mean, there's Ethers in there too, I think, and a couple Sol. Well, no, that's U.S. So we don't have Sol ones yet, but and you look at it. River, Sam Baker at River puts out great research on this, though. Like something like 19 of the top 25 hedge funds in the world, almost all of them basically American, have bought the ETFs. I mean, they trade, but so there are wide. Is the state of Wisconsin Investment Board. There's foreign sovereign wealth funds buying it, right? Like it is significantly easier for an institution to buy a pure Bitcoin ETF, spot-based ETF, than it is for them to buy spot Bitcoin. Like, that's just, they are already set up to do that. They can buy any stock that trades on like the NASDAQ or the NYSE is very easy for people to buy, right? There's a reason for that. It's decades of like financial infrastructure, right? You can buy it from your Fidelity account, your Robinhood account. You can buy them in your Cash App account. I mean, obviously you can buy Bitcoin on Cash App too, which I recommend. It's a good experience. But like they did unlock significant capital, right? And so I think it's a combo of, I think the main reason U.S. versus the rest of the world is just that like our capital markets are so much bigger and deeper, and we have a better rule of law and than most other places, and that's why. But I do think the U.S. being supportive is also a big part of the story. I mean, being not hostile. I mean, those ETFs launched in the last year of Joe Biden's presidency when his administration was extremely hostile, and they still did great, right, last year. So, it cuts through, and those, it's just so funny, though, that, like, you spend years calling for these ETFs, rightly so. I mean, I am a firm believer that, Bitcoin should be available everywhere in basically every vehicle, right? You want to buy it at your bank, you should be allowed to. You want to buy it in an ETF, you should be allowed to. Like, you want to buy it on the street, you should be allowed to. You want to buy it from on-ramp and store it in multi-sig custody, like, you should be allowed to, right? Like, I don't think it's bad for Bitcoin that, like, ETFs exist. But the fact that we spend so long calling for that, and now people are doing the Treasury strategy rather than just buying the ETFs, like, it's crazy to me that, like, that's where this has gone. But you're always constantly surprised. I do think the U.S. stands alone when it comes to capital markets, and that includes Bitcoin capital markets.
Yeah, speaking of, that makes a lot of sense. And speaking of the research report that River put together, I don't have it in front of me, so I won't pull it up, but I want to get your general thoughts just on the state of the U.S. economy and the fiscal position. I just can't take it at face value, but Elon talking about how he needed to be a part of Doge and then recognized that the interest expense was larger than, like, he obviously had to know that before he got involved, but then he's talking about it on an interview. Yeah. And so it's interesting now that in the zeitgeist, you have people like Elon Musk, insane amount of wealth and influence, talking about the fiscal position of the United States maybe being at a point of no return. And I'm curious, like, what you make of that, because dollars down about 9% this year, yields are spiking, other nations are accumulating gold. The United States is looking more favorably at Bitcoin with SBR, states are passing legislation. Just how do you think about what's going on from a fiscal perspective? How does Bitcoin from a policy and just more of a strategic perspective fit into the U.S. playbook now?
Yeah, it fits in well, and I think it really does. And look, it used to be like the swan song of doom-saying gold bugs that, like, the debt was going to be too big or whatever. Like, that used to be, and then it was limited. Then it was like, okay, a couple hedge fund managers here and there, or, Ray Dalio, like, ringing the alarm bell. The secret is out. Like, the world is net buying gold and net selling treasuries. Like, that is a fact, right? You can see that in the data. You can see Bitcoin all-time highs. You can see gold all-time highs. And you see, like, I mean, not literally all-time highs for treasury yields, but, bad. Like, it's like a beach ball underwater, right? Like, they just can't get those rates, those yields down. And that signals a declining appetite for U.S. debt, which makes sense, like, because we continuously as a country show an inability to spend wisely and maintain a healthy budget. It's not possible. There hasn't even been a budget in, like, decades. Like, dude, they just keep passing continuing resolutions and stuff, right? Like, they're not even doing the budget. Okay. And look, Elon has a long history of pretending he didn't know something obvious, like, as with the Bitcoin proof of work electricity use, which he obviously must have known. And I would say, and using that as a smokescreen for something that is self-serving. In the case of Bitcoin mining, well, he needed to be pro ESG and he was probably getting pressure, right? In the case of the big, beautiful bill, it doesn't include EV tax credits. And, like, he's probably pretty upset about that, since most of Tesla's revenue over the years has been from selling those tax credits to other companies, right? So, but he's not wrong. He isn't actually wrong. He's definitely right. I think more people know it than ever. I think, it's like pretty much just during this podcast, we'll have added like $300 or something of debt for every person in America, right? Like, the number just keeps going up. And I think it's not just the macro and the fiscal, but it's also the geopolitical. Other countries don't, we're clearly in the Pax Americana of, like, post 1991, even if it may even have ended, on 9/11, it's certainly basically ended now. We no longer have the ability to unilaterally project force all around the world. We have strong ability, right? But, like, the dollar is no longer the de facto thing. You've got Russia and China settling trades in rubles and renminbi instead of in dollars. You've got an increasing amount of that. Continuous chatter about whether there'll be a BRICS currency. You're clearly entering a more multipolar world. And I think in that spot, non-sovereign commodity monies like gold and Bitcoin should do quite well, I think. I think it's a little tricky with the U.S. government. I think, just like I said, I mean, basically any portfolio should own one of the best performing assets in the history of the world, especially one that has these. I mean, Bitcoin is perfect to be a strategic asset, right? Because, you know, it lacks obviously certain functionality. It's hard on the L1 to send small amounts, or it's a little bit slow, 10 minutes. I mean, it's orders of magnitude faster than the traditional system, right? It's transparent. It's not very private, but like for like reserves or like international trade, those don't really matter. This has non-sovereign issuance, no issuer, right? No liability to any issuer at all. It's able to be held cryptographically and securely. Can't really, I mean, with good custody and multi-sig and, you know, the standards of custody, can't really be stolen by your adversary. And if you want to spend it, you know, I can send $1 billion across the Bitcoin network in 10 minutes. If you want to send $1 billion of gold, you have to send a literal warship, right? It's just simply not useful, right? Gold's biggest transactional use over the last like 50 years has been one dude taking it out of a cage in the basement of the New York Fed and rolling it across the floor and putting it in a different cage. That's literally how like a foreign country settles with another foreign country. They just call up the New York Fed and be like, can you just like move those gold bars from that room to that room? Like that's the only way it works as a settlement vehicle. So that it sucks as a settlement vehicle. Now it is really good because like it's been around for, you know, all of time and has, you know, multi-millennia of establishment as this, you know, non-debasable commodity money. And it's got all those features, right? It's scarce, but it's not too scarce. It's like just right? But Bitcoin, just like Satoshi said in that early post about, you know, imagine as a thought experiment, like a weightless, colorless, odorless version of gold. I mean, it's just really good. And I think, Jackson, like, I think that's why countries, states, like sovereign wealth funds, like it's useful. It's undeniably useful in that world, and we are heading towards it. But yes, not just the macro and fiscal, but also the geopolitical, I think all point to growing Bitcoin adoption.
And maybe to extend that sort of like strategic plan or concepts of the U.S. We were talking a bit about this before we hit record, but like where do stablecoins fit into that strategic playbook? Because I think there's this notion of maybe you can continue to exert dollar dominance across the world if you allow stablecoins to proliferate. And I think you're seeing that in sort of the order of operations of the legislation, right? Like the Genius Act comes first, then we'll do some market structure, then we'll get to the SBR. Like how do stablecoins fit into? And Luke Gromen has talked about this a ton as well, of sort of, you know, this tacit admission or you know, allowing the citizen to invest in Bitcoin or hard assets while still transacting in dollars. So spread stablecoins allow citizens to save in Bitcoin, sort of remove the toxicity from Bitcoin. You could even go back to the approval of the ETFs as like the first signpost of like, this is okay now. So I guess all of that is to say, where do stablecoins fit into this strategic playbook?
I think that's right. Luke's point is right. That is obviously the way for the government, probably the governments, but certainly the U.S. government to allow the proliferation of Bitcoin is in that way as a store of value asset, not as a money, right? And I think this is an interesting contradiction here with the U.S. strategic Bitcoin reserve concept, which is like a lot of the ideas of funding it, I think are totally unpalatable to the government because like any acknowledgement that the dollar needs further backing, right? Like people have talked about using this thing, the Exchange Stabilization Fund at the Treasury, which is a fund set up literally to let the Secretary of the Treasury like basically buy and sell FX in order to help protect the dollar, right, in general. I don't know the last time they've used it, decades probably, right? But it's sitting there. And some people say, well, they should buy some Bitcoin with that. And I'm saying if you buy Bitcoin with that, you're going to collapse the dollar. Like people are going to say, wait a second, I thought the dollar wasn't backed by anything but the full faith and credit. Now you're like backing it with something. Like it wouldn't matter if they bought popsicle sticks in that thing. It would spook markets, right? Same thing with bit bonds. Like, you know, have the Treasury issue like some fixed income securities that have a Bitcoin element. Everyone that could spook the debt markets badly and harm the dollar, right? So they got to figure out for the SBR how to fund it in a way that doesn't harm the dollar. If for no other reason than that the president, for whom they all work, has called for the dollar to remain the global reserve currency, right? And so transitioning a little bit closer now, Brian, to your question, like at the crypto roundtable in the White House on March 6th or March 4th or whatever day that was, Scott Bessent literally said, we will protect and grow the U.S. dollar reserve status, and we will use stablecoins to do that. That's what he said. And I think they have a strategy here, which is, look, you don't want to buy our debt, or you don't want to own as much of it, or you don't want to transact in our dollars. Fine. We'll just dollarize the smartphone of every one of your citizens. Like, it is a subversive and powerful American empire play, and it should be seen as that. It's not a crypto bill. Like, watching some of the, longtime antagonists like Senator Elizabeth Warren rail against the Genius Act like it's some kind of handout to crypto. It's like, hello, we can all issue these today. We're not the ones that need this. I mean, there's 200 billion of US dollar denominated stablecoins already in circulation from crypto firms, right? Like, it's not a handout to crypto. It should be seen as a dollar dominance bill. That is the plan. I think it's a good idea. I think it is a powerful idea. Like, it is a big, big, big idea. And yeah, I mean, look, in the end, every global reserve in the history of the world has failed. Like, I see no reason to believe that the dollar, will for it until the end of time, when the sun engulfs the earth, will still be the global reserve. It's just, you have to believe in the end of history to think that's true. But that doesn't mean that you should give it up willingly, right? And I don't believe any rational country would, no matter how much they like gold or Bitcoin or whatever. Like, it's practically the core of what being a sovereign is the ability to issue money. Like, and you'll never get the U.S. or any other country that has the ability to be the reserve to willingly give that up. And it's funny, like, when the president was saying that the trade imbalances that we have were unfair, right? And I'm like, sir, not only is it not unfair, it's explicitly what we signed up for. Like, that is the Triffin dilemma. Like, the global reserve has to be a net exporter of currency and a net importer of goods. And by the way, it's great. We basically get to trade depreciating paper for a bunch of good stuff that other people make. Like, it's actually it is a privilege, right? Like, but it naturally results in a trade imbalance. And the idea is that, and this is what's so perplexing. There's a contradiction between tariffs and being the global reserve, because when you're the global reserve, like I said, you have to net export dollars. When you add tariffs on imports to your country, you are increasing the cost of global exporters buying your dollars with their goods, right? You don't want to be increasing the cost. You want to be streamlining it, making it super easy to have people have dollars in their wallet, right? So countervailing that is how I look at stablecoins. The idea is, well, we're doing tariffs here, and the other stuff that's multipolar trends and whatever is an impediment, a headwind to dollar reserve status. How can we put a tailwind behind it? And I think that, to me, that's how I view stablecoins as strategic, which is that we can just put dollars everywhere, right? It doesn't mean that the dollar, the DXY is going to go up. Probably not. It probably just continues to go down forever, the value, but like, it's reserve status is different than a strong dollar, right? Like, you were talking about distributing the dollars, not so much like how much they are valued versus other things. I think the U.S. needs a weaker dollar, like, to help us pay our debt, right? Like, that's obvious. But I think I see stablecoins as highly strategic. I also see them as benign in the face of Bitcoin. I don't see, I know a lot of Bitcoiners, right, who want Bitcoin to be itself the global reserve currency. Like, I really don't think that will ever happen, and I think that's okay. Like, I think Bitcoin can win massively and will win massively. It doesn't need to be the global reserve. I don't think, and I'm not offering a qualitative assessment. I'm saying I predict that there will never be a Bitcoin-backed dollar. There will never be. We're not going back to the gold standard. You're not going to get the Bitcoin standard. I don't believe that will ever happen. So, in the face of that, you may as well. I'd rather have it be the dollar with us allowed to buy and hold Bitcoin than Chinese renminbi or like BRICS currency. Like, I mean, still the best of the. What was the Winston Churchill, like, democracy is the worst one except for all the others. Like, the dollar's the worst one except for all the others. So why not upgrade the rails? It's an upgrade to the dollar. To me, this shouldn't be controversial. They should have done it years ago. I don't know. Like, if there's any better technology, if you could, if there's a new type of physical wire that will make it easier to be the global reserve, they should do it. I mean, it's just purely logical and strategic.
Yeah, a few things to call out. We had a podcast earlier in the week with Jacob Shapiro, and there was a little bit of, I don't know if it wasn't antagonistic, but it was a little bearish on like Trump's strategy, and it was referencing pulling forward like 20 years of what was going to happen to today. And we had a conversation this morning with Brahm, and the way I was able to, the time I wasn't able to, but today think about like the U.S. is running a startup playbook and basically trying to disrupt themselves effectively. There's innovator's dilemma, and that's where Bitcoin adoption and then stablecoin proliferation comes into play of like how do we actually prolong this. And one of the things that doesn't get talked about is the structural demand for stables at the banking level if they're going to hold Bitcoin, because we're talking about the proliferation outside the U.S. But if banks are going to start custodying this, which I think we all expect they will be, there's going to be some standard, at least we believe, and that was set up where they have to hold some amount of dollars or treasuries, which would be a demand for treasuries, not stable coins. But then the other one to call out is the banks. I think like I got really bullish on where the price of Bitcoin goes once I saw this bill starting to look like it was going to get passed because of what Tether and BTC end up being in that trading pair. And I think we underappreciate once the notion of a digitization or a digital dollar exists in everyone's bank account and how that can be traded into another digital currency and what that looks like. And then how that proliferates through capital markets, through the internet. Like, I think that's super bullish for Bitcoin long term. I will make a bet to Alex on whatever he wants that Bitcoin will eventually. I don't say this a lot because it's not commercial, but you were so emphatic that it won't be as the reserve. It's just an inefficient way for like us to transfer between two, because this is something that Parker, I think, keyed in on, is we've never had a currency and a currency and a commodity, right? Like Bitcoin is like gold is a commodity, and then you had to shave it off into creating a currency, and that's where you ended up, or you had to like create dollars and second layers. But Bitcoin is a commodity and is a currency, and that's what gets hard to via Satoshi. So at the end of the day, like Satoshis will be priced in there because it's just the most efficient way, and people will want the sats versus the dollar. Now, what is that time scale? Is it 100 years? Is it 20 years? I don't know, but I would feel fairly confident Bitcoin wins. It ends up being the thing that people want, and so that's what naturally would be the most efficient way to transact.
I think that's true. I think here's the other thing, like, you're talking about sort of like I'm thinking more of like a Gresham's law concept here. Like, yes, we all want fiat. You all want the unshaved coins, not the shaved ones, right? But the thing is like, I'm sorry, we all want Bitcoin. You don't want the shaved coins. You want the unshaved coins, right? That's why the quarters have the ridges on them, because you could shave off and then melt down the value of the coins. Now you can't now because our coins aren't even valuable in a metal sense. I think this, though, like, I don't want to spend Bitcoin on anything that's not hard. I don't want to pay. I personally, like, I'll buy a house out of stone and brick with Bitcoin, but I don't want to buy Amazon fucking credits with Bitcoin. Like, there is a need for, I believe, and not just in a anti-Bitcoin standard way, for fast, crappy money. Like, because there are fast,
but the kicker is, let's pretend like the 0 to 1 is finite scarcity. The layers will figure out, right? Because if you can figure out finite scarcity, the easy part is how do you make it fast? The kicker is whatever you want, somebody's going to want Bitcoin for. So you have to make the decision. That's actually how you fix everything else. That's the counter. Like
possible, but I mean, again, think about it. It's not just layers now. There is no gold backing the dollar. It's pure fiat. So you're talking about a devolution back to a commodity money based world, and I just feel like the world is not going back. We might all want Bitcoin, sure, but I don't know. I guess, yeah. Theoretically, if everyone refuses to accept anything but Bitcoin for goods and services, then yeah, it will. That's what being global money will mean, right? I mean, that is what it is. I don't think it's going to happen, but power to it. I mean, I'm long Bitcoin. Have you guys not seen? I mean, I'd love it. I just feel the main reason I make this point, though, is to tell people that it doesn't have to happen. You don't have to believe that's going to happen to be bullish Bitcoin. That's my main takeaway. Sure. Because I talk to a lot of institutional investors, and they're like, oh, I heard this. I'm not going to name many of them my friends. I heard this Bitcoin influencer saying that like everything will be Bitcoin. I just think that's crazy. And I'm like, oh, you don't have to agree with him to be bullish Bitcoin, though. Like, there's a whole other world where, it takes out gold, right? Gold now is what, 25 trillion or something? It's up a lot since we used to say 20 trillion, right? Like, dude, that's a 12 bagger from here if Bitcoin's as valuable as gold, right? And there's plenty there, like beyond whether it's used as money.
I definitely agree there, because that's like literally the founding of this whole business is meeting the market where they're at. And there's a difference between being right there's a difference between, do you want to make money or do you want to be right? And making money is what you just said, is like meeting the market.
Yeah, I'm
Nobody
just
wants to
saying,
hear the dollar is going to end and we're going to use it, but it
that's what
just
I'm
had
saying.
to be on the record, just
Maybe we
so we can look.
will. That's right. I mean, I agree with you. It's totally possible, and I'm fine with it. But the reason I like to be hyperbolic with that statement is so that there's somebody out here saying you don't have to agree with that, and you can still be mega bullish on Bitcoin and its adoption as in a variety of different things. And you are right, by the way. Gold is a commodity money. You did have actual gold coins. It wasn't always layer twos, right? Like, the Romans themselves probably recapped and debased the coins like on 3 different occasions, major occasions over their long empire, and it was true gold coins. But you don't have to believe that like it's going to be, the only money in order to see a world where Bitcoin is widely adopted and useful, and not just useful like a store of value. It could be useful in some other way. Maybe it's a money, but only for big giant purchases or big long distance purchases, or maybe it is an interbank money, or maybe it is closer to what you're saying, Michael, and it's like what Hal Finney said, it's Bitcoin banks, and it really is the foundation of a new layer. All of those are possible. Any one of them, I think, means Bitcoin can win.
So, Alex, please entertain me. Let me operate under the assumption that the top is in. We started the episode, the top is in. I want to hear why the top isn't in. I mean, you said something, I think, at the start of the episode where it was like a lot of bullish things have been announced, but actually haven't happened yet.
Yeah.
I don't actually believe the top is in. I want to say it to say it, but
yeah,
we have 7 months left.
Against the top is in?
Yeah, I want to hear, like, we got 7 more months of the year. In theory, cycles, maybe they don't need to happen anymore to the same extent they have in the past, but I just want to hear your unfettered thoughts. Like, what are you paying attention to? What's exciting for the rest of the 2025? Well,
business and market cycles will always exist, right? I think that sort of Bitcoin having driven crypto market cycle, I think probably doesn't exist anymore. And it really shouldn't exist. I mean, to the extent it was ever the halving actually causing that, like the halving is an immaterial supply difference now versus daily Bitcoin float. Like, it's not material whether you go from 900 to 450 coins per day on average. Like, that does not matter. Bitcoin trades $10 to $50 billion a day of Bitcoin, right? But I think why? So you still have many shoes to drop on that ETF story, and I had forgotten that I was on it was like a year and a half ago, I guess, at this point. But I'm sure I talked about it in January 2024 when I was on the show, of the wirehouses, the RIAs, like the family offices. There's still an enormous amount of technical unlock that still has to happen. Like, just today or yesterday, JPM said they'll start allowing you to margin your Bitcoin ETFs, right? There's still a lot like that to happen. And so, and we're finally like a year in now. And so, like, it's going to actually finally start happening with the big banks, the big asset managers actually finally allowing people to buy the Bitcoin ETFs. So there's that benign sort of passive story on the underside that I think does lead to more ownership over time. You have, basically all of the like state or national level SPR related stuff. And like literally right now, think about what the US SPR ordered in March to hold and try to buy Bitcoin, and to hold or sell if they want all altcoins. Literally, Bitcoin put in buy only mode. Literally every altcoin put in sell only mode. They're actually prohibited from buying altcoins in that executive order. 30 days after that, they had to deliver an audit to the president of how much Bitcoin the government thinks it owns. Actually, much, much more complicated than people think. And then 30 days after that, so 60 days after the EO, deliver a list of possible budget-neutral strategies to acquire more. None of that's public, okay? It has not been released publicly. We don't know how much BTC the government thinks it owns. We don't know what they are thinking of as possible budget-neutral acquisition strategies. We don't know. We think we might find out in July when the other EO mandated presidential working group report is released, but technically there's nothing about the SBR in that EO, and therefore it doesn't have to be in that report. There might not. Who knows if we'll find it. If you read the EO, it doesn't mandate that those strategies or the audit be made public. It mandates that Treasury and Commerce deliver that to the White House. So I do think there is a point, at a minimum, forgetting whether we buy, okay, just when we get the number, when the U.S. government says we officially own, 100,000 BTC, that's going to be a huge catalyst, I think. Whenever that is, and I think it will happen. I mean, at some point, like, dude, they've got to tell us. It's actually tricky because so many of the coins that the government has are encumbered in various legal or civil asset forfeiture states of being, right? And the government, there is federal law that says the government can't just take stuff like and make it and move it into its own account, right? So they got to go through all of those U.S. attorney districts, 94 of them, and be like, do you guys have any Bitcoin? What's the current state of it? Like, oh, do you owe it? Like, for example, Razzle Khan's Bitfinex hacked coins, right? Like, it's a lot. It's like 100,000 or something. I forget. We think the government has about 198K Bitcoin. That's what we think. That's what the market thinks. That's what Arkham shows. These explorers think. A huge portion of that is recovered stolen funds, and it's not like the victim is dead. Like, they presumably will be returned to the victim, right? And or there'll be like creditor, like bankruptcy proceedings in a lot of these. So we don't know, and it's actually pretty hard, like just laborious for the government to figure out like what the current status is of all these. But at some point they will, and at some point we'll learn it. And that's not talking about, hopefully at some point they'll, follow the president's order and actually buy some, right? So those are obvious catalysts. I mean, I think everybody knows that. But merely finding out the audit results, I think, would be highly positive. Then you've got all the macro stuff, right, that is, I think, uniquely supportive for hard non-sovereign assets. And then you've got a bunch of crypto stuff that I think ultimately is still positive for Bitcoin, even if it's only tangentially related, right? People normalizing the use of public blockchains and public key cryptography around assets is naturally going to lead to more Bitcoin adoption. Like, now, it's probably going to lead to a lot of altcoin adoption too. But again, like, it's a free market. Hester Peirce told the Bitcoin audience in Vegas, like, Bitcoiners, stop asking for the government to arrest shitcoiners. All right? Like, it's a free market. Like, just, you have the best asset, just exalt it. It's literally what Hester Peirce from the SEC said to the giant audience in Vegas. And I've always believed that. Like, I don't need others to lose so that Bitcoin can win. I think Bitcoin can win on its own, and that's fine. But I actually think Bitcoin benefits long-term from the institutional use of things like stablecoins, of something like DeFi. We also look, now here's some more cute ones I'll throw out here, Jackson. One, Bitcoin credit cards, like Gemini's card, right? They have to buy Bitcoin. If those become widely adopted, think about how nice it is for a turbo normie to just go about their life and be acquiring Bitcoin in pieces. Like, I think it's actually a very, very powerful retail product. And if they get big, they have to buy Bitcoin every day, right? So, like, those could be an interesting catalyst. I think also the Bitcoin Layer 2 story is a big positive catalyst, actually. And, we're an investor in one Citria, but, there's Alpin. These are ZK rollups. I think that's powerful. Like, I don't know where Bitcoin maxis have landed on this. For a long time, it was like, don't do it on my L1, do it on the L2. And then some of them are like, well, we don't like the L2s either because they're going to be filled with shitcoins. And it's like, at some point, like, we just need more block space, and people want to do stuff on Bitcoin. And some of these are really, really powerful. Like, I also like Arcade and Arc and Lightspark, Spark L2. And like, there's a bunch of interesting layer 2 stuff being built that like could really drive a lot of usage. And ultimately, I think it's very likely, not just with Bitcoin, but basically we think this for almost all layer 1 blockchains, they end up being like solely filled with like proofs for layer 2s, right? That is what drives the block space demand. And Bitcoin less likely to get there soon than something like Ethereum, because like Bitcoiners like to hold L1 Bitcoin in their self-custody. And I get that. I do myself, right? But like, I think it is the best network also. It's the highest fidelity blockchain in the world. It's the most transparent, most predictable, most secure. So like there's data anchoring that people want to do on it, right? And those are going to start coming pretty soon. Like these new ones. I mean, this is literally like what a lot of people said, where it was like altcoins are test nets. Like the Alpin and Citria are literally taking the there have been enormous developments. Bitcoiners may not realize this if they don't follow blockchains. There have been enormous advancements in cryptographic ledgers. Enormous, way beyond anything that we do. Even Lightning, the rest of the world moved beyond state channel payment channels like 7 years ago because they're not that good. They are good in some ways. They're good because they're more private. They're good because you can be more self-sovereign. There's no global state. You can't do any type of that. I mean, I'll be stunned, and I love the teams at Lightning Labs and Tether, but I will be absolutely stunned if USDT on Lightning becomes remotely big at all. Lightning's not made for that, right? It's so easy to do tokens on a different type of blockchain. But there's a bunch of interesting ones coming, and the Citria and Alpin are ZK rollups, and like this is an enormous advancement in distributed ledgers, right? And I think it would be fascinating to see what happens if people start doing those. I don't think it's just going to be monkey pictures. I think there is going to be some interesting finance that can be done with Bitcoin as the base asset in a highly secure L2. And so that's one that I'm excited for. Don't know exactly when those are really coming, but and then again, the DLC based ones and these, I don't even know how Arcade works yet. I've got somebody who's looking into it to explain it to me. There's a lot of interesting stuff on the L2 front on the dev side. And then, so what have I said? The cards, the institutions, the states, the
where do you? I was going to say,
other?
where do you put just global liquidity generally? Because we've all seen the charts of M2 versus Bitcoin on the lag, and I think to me that's the biggest difference. If you're trying to compare what looks like a similar double top, is like, well, back then we were about to enter the fastest rate hike cycle in history and constrain liquidity, and now we're sort of entering the opposite.
We're probably going to enter a lower interest rate environment, probably. Although I would say the Fed is. And power to them, by the way. Like, keeping rates high is the Fed like being an adult in the room. Like, to be honest, right? Like, it's every time they cut rates, they're being profligate, and every time they keep them high or hike them, they're being conservative. And like, that's, you got to respect that. But yes, I think we're much more likely to have rates come down than we are to have them go up. So you're right. I think when it comes to like global M2, like, I'm not a huge fan of this metric. It's not really a good measure of money, but also like bank reserves might be better, but like, but it is also kind of the same. So like, I think the chart actually works. It's just probably not the actual right instrument to measure it against. I mean, it's the same thing. That's the other reason I say it. So an even more sort of crass reason why Bitcoiners should be fine with stablecoins. Like, dude, the dollar depreciating means Bitcoin appreciates against it. So Bitcoin doesn't go to infinity because it's the only asset, but like, it's perfectly fine trading it against a perpetually debasing dollar, and that's what we have. And we know we have to debase it. We know liquidity, like an issuance of the dollar, has to go higher. We cannot afford to pay off this debt. It is truly impossible. I look back to Elon on that too. Like, I guess, look, he's throwing up his hands. Like, I tried. I knew it was a problem, and I just didn't realize like how big of a problem it was. And like, whatever, man, good for him. I mean, if he didn't actually know, like, he learned like everybody else. Eventually, everyone gets there. The odds of this government, our government design, coming up with a way to save this fiscal and debt situation, extremely unlikely, right? Extremely unlikely. Most likely in 5 or 10 years, we have 100 trillion in debt. Almost, I would like that. That's a safe bet, I think, right? Yeah. Way more likely than we actually reduce it.
Sure.
And Bitcoin looks great in that way. And it's not just us. The Chinese are printing a ton. Like, there's plenty of printing going on. And yeah, you probably enter a more printing era pretty soon, I would think. I mean, this is the big question with macro is like, look, stocks are almost at all-time highs still. They're like 1.5% off all-time highs, right? Like, we're back. I mean, April 7th, Liberation Day, was like the bottom, it turns out. And we basically have done a full V. Like, we were up at the start of the year, all the way down a bunch. I mean, 20% or something in equities down, then basically all the way back. And so stocks look okay. Inflation is low. I think core PCE is 2.1%, like CPI is 2.5%. If you told and employment's at like 4.5%, or unemployment's like at 4, somewhere in the 4s. If you told the Fed like 2 years ago that they'd have 2.1% core PCE and 4% unemployment, they would literally be standing up cheering. Like, it worked. They did it, quote unquote, right? So why aren't they cutting? Like, that's the question. Like, they're having this stiff upper lip about it. And I think the fear is there's a lot of sort of like latent indicators that the employment market is going to crack and it's going to get bad. And housing's a great one to look at. It's like totally drying up. Like, there's like virtually no transactions. Like, and it's so tight. Like, if that turns, then you'll see. Then what would he do in that response, right? It's like when the asteroid comes down and the dinosaur turns to the other and he says, "Quick, print money," right? Like, I think that's the reason they're not doing it yet, because they worry that they might do it later, right? And I think that's, but again, I don't think there's like zero likelihood of higher rates anytime soon. So you're right, Brian, when the liquidity is going to come back at some point. I think they're trying really hard not to, jam inflation, right? Because also tariffs are going to be inflationary. I think the trade deficit numbers came out and it's like, oh, wow, our trade imbalance declined a lot. Well, yeah, that's because people stopped shipping us stuff over the last couple of months because they're worried about tariffs, right? So tariffs are inflationary by design, by definition, right? Like, goods will become more expensive. It's not structural so much as it is trade, but like they're really, I mean, inflation is like the it's like the devil to a central bank and to a country and a people. It's a terrible, terrible thing that hurts everybody and hurts the poorest people the most. And they really are afraid. And I think otherwise, they're just kind of like battle scarred, or like they have PTSD from the inflation that happened under COVID, that they're just being super cautious, but they will open the printer soon, I think, at some point.
Yeah, that the juxtaposition, I know we got to wrap up here in a few minutes. I thought it was an interesting juxtaposition about Trump and Senator Warren agreeing on scrapping the debt ceiling or the debt limit. Meanwhile, you have Trump.
They both said, wow, yeah, we both agree.
It's remarkable, right? So then you have that, and then on the flip side, you have the Trump family is uber bullish on Bitcoin. They're attending the conferences. They're involved in mining. The was like last week, $2.5 trillion they were looking to raise through equity and debt financing
to do the Treasury strategy.
Yep. Yeah, the S1 as well for a like ETF product too. So I think it's just interesting to watch how that plays out. Where you have Trump. I mean, they did a lot of deficit spending in the first term as well. It's 45 out of the last 50 years the U.S. has run a deficit. So he's
a populist. I mean, they're populist. That's. I mean, you don't get elected telling people you're going to give them less and tax them more. And that's the problem. I mean, that's the issue. So we're going to give people more and tax them less, which is, bam, there's the problem. That's the debt.
Maybe Elon will come back and become an advocate for Bitcoin, since he's a little upset that he doesn't get his tax credits in this new bill.
So close. I don't know why he hasn't like revisited his 2021 love of the Bitcoin, because like he's so close. Like his stuff about the debt, dude, like hello, like that's what we've all been saying for years. Oh, I don't know. Maybe in like 20 years he'll fly back down from Mars and grace us plebs with his presence, and we'll be able to leave this debt collapsing nation and hop on Starship with him and live gloriously in the stars forever. That's my hope.
Well, before we let you go, is there anything, Alex, you wanted to touch on with Galaxy now trading on NASDAQ? I'm not sure if you wanted to discuss anything there, or better to keep...
we're super happy. It's been a long road. Galaxy has been publicly traded since it launched in 2018, but in Canada, we love our Canadian friends, but the United States, as I said earlier on this pod, is the premier capital market in the world. We're just really proud to tell our story. I mean, we're about to be, we think we're going to be one of the biggest data center providers in the world. So you got a data center business with a giant crypto capital markets business on top. And I think we're a leader in both. So we think it's a very interesting company. I mean, I've been at Galaxy for 4.5 years at this point, and this was a huge milestone for us and our employees and our investors. So we're just happy to be here. But the game doesn't stop. Like the show must go on. We have a lot of exciting things that we're excited to do and announce over the coming months and years.
Congratulations, Alex. Thank you for your generosity with the time. It was a fun conversation as well. For those who are not following you, where do you want to point them to? Do you want Twitter, research?
Follow me at Intangible Coins on Twitter, GLXY Research on Twitter, galaxy.com/research. You can read all our reports there. And
get your daily dose of memes.
Yes, and see my memes, please. Please like my memes, guys.
Thanks, Alex.
Thanks, Alex.
Fun.
This is fun.
Thanks for having me.
Thanks for listening to this week's episode of the show. If you found the information valuable, please share the episode with a friend or leave a rating on your favorite podcast app. All the links we discussed in today's show will be in the show notes inside your podcast app. Before we finish, a quick reminder that OnRamp Media is for informational and entertainment purposes only, and nothing should be construed as investment or legal advice. Regardless of where you are on your Bitcoin journey, we'd love to hear from you. Visit onrampbitcoin.com/contact to schedule a consultation with one of our private client advisors.